Okay, let's go.
What's up, little ducks, and welcome back to another episode with Spy, where we look at where Spy's been, where it's going, and the trades we took for the week, guys. So let's go ahead and get started. I want to show you the last 5 days of Spy, guys, and you can see that Spy came down, guys, and we went across, and then obviously we went upwards, guys. And right now Spy has an amazing trend going up. Now, I do want to point something out, guys, that I talked to you about last week. Let me grab my little trusty arrow, guys. I told you Spy was going to come right back down, guys, to that 8-day EMA, which is this white line on the chart. And sure enough, we did, guys. Every time Spy goes up, okay, and I'll keep repeating this, guys, it needs to come back and touch that line. And I can outline this all day long, guys, on this chart. And that's how the stock market works. If you see Spy is up, guys, and you think it's overextended, then surely you should be waiting for them to come back and touch that 8-day EMA. And there you go, guys. Now, we do have something that is ready to go, and I think that they're going to pop. And I'm going to give you guys a target of where Spy is going to go for the year. I do want to point something out, guys, and this is why I'm going to give you the target, and the target is going to sound amazing to you. Check this out. Since we came from what this pattern is called a cup and handle, okay, now we have formed another cup and handle, guys, pattern, okay. Now, you can also look at this pattern in another way. This is what they call a double top. That means the stock came down, guys, and it came back up, hit a top, and retrace backwards. And usually at the second one, guys, it will pop out. Now, we can say this is 1, 2, 3, 4 times. And usually some people like that pattern and they get into a stock. But we have the same thing. Either we're saying this is a cup and handle, or we are saying we got a double top, guys. And usually when they double top, they're going to go. Now, some people will say, well, it can still go down, coach. Absolutely. But one of the things that I have found in my trading career, guys, is that unless you got a double bottom, then it's not going to happen. And you can see, okay, that there was no double bottom ever on this pattern here or this one here, guys. So this pattern here is telling us that we have a very bullish pattern going on, guys. And check this out. We can call this a V-shaped recovery, okay? And every time we get a V-shaped recovery, it's off to the races, guys. All right, guys. So this week, I'm going to give you a nice, cool, golden yellow box, guys, for the Spy 20-minute. You guys know I love trading on the 20-minute. If you're new to the channel and you're a new trader, guys, this line here is called the EMA, exponential moving average. It's the 20-day moving average, guys, if you're on the daily. But one thing stock traders forget to tell you is that the average price of the stock, guys, this is going to give me the average price for the last 20 candles, guys. Okay, so if you're on the 20-minute, it's the last 20 candles. If you're on the daily chart, it's the last 20 days. So we're looking at Spy, guys, and we started here on Monday, May 18th, and you can see there was a downtrend. I'm going to remind you, if you're a new trader, guys, and you're using the 20 EMA like me, it tells the whole story. Look at how they stayed under the 20 EMA the whole time, guys. They try to get out here, and then finally a second try here. Again, right, double top, or we can say cup and handle like we talked about before. Then they come up, and of course they retrace, which is healthy and normal, right on the 20, and then they kept going, guys. Now, how do you trade this? Okay, if you start the day and you see a green candle, guys, the first thing you want to do is you want to buy the stock or you want to buy calls, but then it starts going down on you. How do you trade this? Well, I'm glad you asked that question, because the answer is super, super easy. You're going to go click on the link in the description, guys, and you're going to go grab this indicator that's called the Dominator, guys. And you're going to start using these green triangles, guys. And I'm going to show you especially if you're a new trader, guys, how you're going to make money in this market. Now, every time this green triangle comes on, guys, I go and buy a 7-day call, guys. That means it's a 7 DTE, and I got 7 days before it expires. And why do I do that? In case the price falls down, guys, okay, and then it goes up, I am still good. So I'm going to show you an example of how this works. This green triangle, guys, I bought a call and it went up about $2.50. Okay. But my call expires in 7 days. This entire box is a 5-day box, guys. So that means by Friday, I still have 2 more days before expiration. So now this was the call I bought, guys. Here, the stock price fell a total of $7, and by the end of the week the stock price went up, guys. And guess what? This call was up $10.39. Then when the next triangle turned on, guys, it went down, of course, $2.91. And by the end of the week, guys, guess what? Same thing with the next one, guys. We had a dip. And then obviously we had a nice run up for $15.41, guys. And check this one out. This one did not go down because we reached the bottom. And there you go. That was a $16.99 move on that call. And here comes the next green triangle, guys. And there it is. And then our next green triangle, guys, this one did dip down and it went down $3.66. And this is very important because a lot of people, as soon as they see red, they want to get out, guys. But this is a 7-day expiration, which means it's going to expire next Wednesday. So I had plenty of time. And then the move came, guys, by the end of the week. We were up $8.44 on that particular triangle. And then this one gave us 11.28, guys. And you see where I'm going with this? Check this out. We had another nice move here, guys. Okay. $9.98. And then lastly, we had this one that we are currently still holding, guys, because we have 7 days on this. These contracts, all these contracts here, guys, I recommend it to my team. Take your profits. Look at all the money, guys. Okay. A $15 move on one call option. $15, guys. I'm going to repeat it. This will help with a lot of bills you have, guys. And if you're using the dominator, guys, you just wait for that triangle and then you jump in, guys. Okay. Now, I'm going to show you real quickly how it works with other stocks. So here is Tesla, guys, for the week. And look at these green triangles, guys. Every single one was a winner at the end of the week. Look at that. $23 move, 25, 35, almost 25, 18, 17, 14, and 11, guys. Okay. Isn't it interesting? Even if the stock is falling, okay, by the 7th day, you're going to be green. Look at that. Okay. You can't make this up, guys. Go look at the chart. Okay. This green triangle tells me when I have an entry, guys. Now, even if the move is still bearish, at some point is going to recover in 7 days, guys. So if you are buying 0 DTEs and you're not making the money you want, guys, now you know why. Okay. Because the market is going to pop up and you're going to have some of these where you can take quick profits and take maybe a $2 or $3 move. Or would you like a $23 move, guys? Okay, I will continue to show you different charts and different stocks so you can see how well this indicator works for me, guys. Okay, if you're a full-time worker, if you're a full-time student, guys, you need this indicator. You need my strategy and you need my coaching, guys, because unless you've been doing this for a long time and you're coaching people or you have a coach, then you need to grab this, guys. All right, guys, now I'm back to SPY here. And what I'm going to recommend is that you go back in the video, guys, and screenshot this, add up all these dollars and ask yourself, what if I caught 50% of these trades? What if I caught 25% of these trades? What would my life be like at the end of the week? And what would my life be like at the end of the month? Now, I did promise you I would give you a target for SPY, guys, for the year. And I'm looking at $846 as a target here, guys. I'm going to tell you why, and I'm going to show you how this works. Okay, super simple. If you have a mentor, your mentor probably didn't see this. If you're trading by yourself, guys, you're trading blind, you need to grab this indicator. Come join my Discord, guys. It's for free, and come learn. Now, I'm going to show you something that you probably haven't seen from anyone else. So let's get started, guys. Okay. Now, I'm going to point this out. Really simple. We have a green triangle here on the monthly chart. This is the monthly chart. We have a green triangle there, guys. And every time we get a green triangle on the monthly, look at the run that they had. Big runs, big runs, big runs. Oops, look at that, guys. What just happened this month, guys? Look at that triangle. That's right, guys. We just went bullish, and a lot of people don't even know it. So let's measure the first green triangle, guys, and all the way to the top here where it went. And I'm looking at this candle right there, guys. Okay. But I'm going to leave this here so it stays nice and neat. And that was an $89 run, guys. Okay. Now, on the next green triangle, guys, we went up, and look at the crosshair. I'm going to go to the top of that candle that they reached. That was $160 move, guys. And I'm not even counting this candle here. I'm starting from when we triggered a bullish move up, guys, which is the green triangle. Now on this one, guys, same thing. Here we go. We're going to go to the top of the wick, guys. Now, obviously, if I went down to this candle, guys, that's $143 move, but we're going to be conservative and call this 82. So we had an $82 run, we had an $89 run, and a $160 run. Now the average that gives us is $110, maybe 120 if you want to call it that, because of the other candles that we did not include. But let's go ahead and measure from the bottom of this wick, and we're going to go up about 110 and $120, guys. And there it is. This is 120, guys. Are we close to that target? Absolutely, guys. We got close. So if I go off of these three averages, guys, this target is very relevant. But I'm going to show you how I did that target. You're going to go over to TradingView, guys, and you're going to grab your little trusty tool here called Trend-Based Fib Extension, guys. And the way this works is that I'm going to take this bottom here, guys, okay, and I'm going to measure to the top where they reached it right here, and the red arrow tells you this is where they found resistance. And then I'm going to come down, guys, to the bottom of that wick on that red, which is where they found support, guys. And so we are looking at about an $846 target. Could be maybe $850, guys, but I'm going to be conservative, and I'm going to leave $846 up there, guys. Okay, this is how you figure out your targets, guys. Okay, Fibonacci will tell you the rules if you look it up. If you want to learn it for free, come join me in the Discord, guys. There's a link below. It's free. You cannot say no to free, guys. And then you can also look up the Dominator. I will teach you how to use this, guys. You will take trades with me. I will send you alerts. Okay. Also, if you found value in this video and you think that I deserve a thumbs up, guys, hit the like button. And if you want to be notified on the next video, hit the subscribe button, guys. See you on the next one.